Tesla stock, that's what we're talking about here today, folks. First off, Tesla revenues coming in at almost $25 billion. They beat by almost $500 million in terms of their revenue line item. Earnings beat quite substantially, came in at 91 cents adjusted versus 82 cents was expected. Net income came in at 2.7 billion. It's an increase of 20%. So as far as those numbers, things kind of look okay. First off, in regards to kind of Tesla's numbers, right? Automotive revenues up 46%. Energy generation and storage revenues up 74%. Services and other revenue up 47%. Those numbers are great. I mean, you know, it doesn't get much better than that. I can't hope for much better than that. That's phenomenal. Total revenue is up 47% year over year. That's phenomenal. Total gross profit on the other side was only up 7%. You never want to see revenues coming in at 47% up in gross profit, only up 7%. Now, we do know that's because of the price cuts, obviously, of the vehicles, so it doesn't come as shocking information. Total GAAP gross margin was down almost 700 basis points on a year-over-year basis. Income from operations was down 3%. Operating margin was down almost 500 basis points. Now, adjusted EBITDA was up 23%. Now, why would I have adjusted EBITDA in red if it's up 23%? Like, that's supposed to be a really good number, right? The reason I have that circled red there is because revenues were up 47%. So if you're going to grow revenues 47%, you don't want to see your adjusted EBITDA only up 23%. Adjusted EBITDA margin came in at about down 372 basis points. Net income was up 20%. EPS was up 20% there, right? You know, those are strong numbers if your revenue's up 20% also. Net cash provided by operating activities was up 30%. That's good. Free cash flow was up a whopping 62%. That's very good. Cash and cash equivalents was up about 22%. Okay. So check this out. Total deliveries of which were subject to operating lease accounting was up 137% on a year-over-year basis. That's insane growth, which speaks volumes to maybe the credit conditions right now. Maybe people either they can't outright buy a car right now, or you know, they can't get the financing for it, or maybe they just can't afford the payments, so a lease is better. Like, there's reasons on why that number's up almost 140% year over year. So my personal opinion is we should exit that business, cut it off. There's so many growth opportunities at Tesla, so many current things they're working on, and so many things that are going in the future. To keep spending time, resources, and energy on this solar business, it just doesn't make sense. It does not make sense. And if it don't make dollars, it don't make sense, okay? And that's the bottom line with the solar business. That's my personal opinion. Okay? Now, in terms of what's going good, storage deployed is doing very well. 222% growth year over year. Tesla locations, very nice growth, 29%. Mobile service fleet continues to expand, 22%. That's phenomenal. Supercharger stations up 33%, and supercharger connectors up 33%. That's going to have to continue to grow substantially, especially with the network, you know, being utilized more than just for Teslas. I mean, obviously, if Tesla's putting up 83% more units out there, right? It delivers up 83%. At the end of the day, with Tesla putting up the sorts of numbers they're putting up in terms of how many vehicles, you're going to need a lot more superchargers and a lot more connectors. And when you talk about even other companies, other EV makers, being able to utilize that as well, we're going to need to continue to expand that quite dramatically. And, you know, it's a CapEx item, right? Now, there's something very interesting, okay, that happened. Because basically Tesla always shows a bunch of pictures after they kind of go through their numbers. And you can kind of tell where maybe the team's at, the executive team, in terms of where their mindset is moving forward. And I don't know if you guys noticed this in the photos or not, but it's very clear on all attention for the company. All the first photos they showed all around Cybertruck. They didn't show anything else for quite a while. It was just Cybertruck photos after Cybertruck photos of Cybertruck testing, of, you know, this is production line at Gigafactory Texas for the Cybertruck here. This is a Cybertruck production line at Gigafactory Texas RC units. It's clear as day, like, you know, where this company's real focus is now at this point in time. It is all on Cybertruck. Everybody is obviously very focused on this, and this is the big thing that's going here. They even took this photo here, the first, you know, Cybertruck coming off the line here, and it's interesting. Everybody had a real nice smile going, look real happy, except for, look at this person right here. Somebody check on her, okay? Somebody check on her. I don't know what's going on there. I noticed that. Everybody's so smiley and happy. She's either disgruntled or she looks mad. She's just super serious. I don't know, man. She means business. That's all I know. So somebody check on that woman, okay? Now, This obviously should always be seen as kind of the most important metric for Tesla. They're trying to grow deliveries and grow them substantially. And we can see the insane growth for vehicle deliveries over time, right? And we've had a few kind of, taper offs of growth, but ultimately this has just been up and up and up. And that's what Elon's going for. That's what the team's going for. That's what we want, right? Now, on the balance sheet side, we are now, check out the growth on just a year-over-year basis. Total stockholder equity, right, which is basically just taking total assets minus total liabilities. We're now sitting at, we were sitting at about $36 billion in total stockholder equity. Now we're up to over $51 billion of stockholder equity, right? So the balance sheet continues to build stronger and stronger and stronger for this company, along with obviously the income statement building stronger. And so we're just building a very a strong financial fortress around this business model now at this point in time to weather anything that's going on out there, right? So a lot of people are looking at that and they're like, what? Come on, man. We beat on revenues by almost $500 million. We came through with those extremely strong delivery numbers. We had that EPS that, beat handily what analysts were expecting. But at the end of the day, folks, okay, we stole a lot of gains from the back half of this year. The stock's up 150+% year to date. If you're going to have those sorts of gains in the first half of this year, you're going to pull like a lot of what could have been potential gains from the back half of this year. You pulled it a lot into the front half of the year. So it doesn't mean Tesla stock can't do well in the back half of this year. It's very possible that Tesla pushes 300+, if not 350+ in the back half of this year. But it's going to be much tougher sledding now at this point in time. And I think an earnings period like this, in an earnings reaction like we just got, that shows you it's going to be tough sledding. To come in with a very nice revenue beat like that and a really nice EPS beat, very impressive. To come in with those sorts of numbers and also margins beat what analysts were expecting as well. If you X out regulatory credits like everybody on the Wall Street was paying attention to, those also beat as well. So they beat on revenue, they beat on margins, they beat on EPS, and yet we got a stock that can't do anything after hours, right? Now, what about myself personally with Tesla stock? Am I planning on buying Tesla stock or anything like that, okay? So, I can say this, if I didn't own any Tesla stock, I would likely be a buyer of Tesla stock on these earnings, okay? I think we've got stability in margins. I think things probably improve from here as long as the economy stays decent. I think revenue is looking really, really nice. I think EPS can definitely strengthen in the back half of this year and going into next year especially. So I think there's a lot going for Tesla over the next, obviously many years. So if I wasn't a shareholder, I would probably be a buyer if I needed to build a position. However, with that being said, it's already a pretty substantial position for me. It's almost $500,000. So I'm comfortable with what I have. Do I want to sell Tesla on this news? Absolutely not. I think there still is potential gains in the back half of this year and obviously going into future years, but I just think it's going to be tougher sledding.